Hello everybody, welcome to another update on the stock screener. Today we're going to talk about Goodfellow. So this was one of my favorite stocks last year. I just sold it because it wasn't doing anything, but when you look at it, you can see that it has actually found a bottom here and is now trying to break out. And I mean, this is the cheapest stock ever, okay? And as you have noticed, lumber has actually started to rise again. So I expect very good earnings in the coming months, right? So Goodfellow just reported earnings, and these earnings are for November. So that's somewhere here to here. So at 600. The next quarter, we will see earnings at double the price of lumber, as you can see here, right? Because lumber has risen. And I don't think the market knows this yet. They don't look at the lumber price. So let's take a look at the earnings that they just posted. So the net earnings were 10 million, and that's apparently an increase of 40%, 30% from last year. All up, sales are up, very good earnings. So let's take a look at how this looks. Look at this chart. So basically, these are the revenues. It's a cyclical business, so it goes up and down. Typically, the lowest is when it's winter, from January to March, which is today, this quarter. So this is the low. Then it goes back up and then down, up and down. And this was for the end of November. So it went up, and probably it will be down somewhere here next quarter. But you need to know that, of course, the lumber price has gone up here. So there's a cushion here. So I expect that this will be stable. So the earnings will be around 40 million. So I put 40 million earnings here. The equity, that's the yellow line, is rising. So the equity has always been the same here. But lately, since 2020, the equity is rising very rapidly and is now at an all-time high, 160 million equity. Now look at the market cap, 73 million. So the equity is around here, and I mean the market cap is around here and the equity is rising. So I expect that the market cap of 73 will eventually catch up with the equity. So that's an easy double from 70 to 140. So that's why I bought this stock again for the candy store. And I'm expecting that this is going to break out like what happened here. So this is going to break out and spike to $20 at least, because then we would go to equity of 170 million and we're only at 70. So that's a double. Okay, and look at the PE ratio. PE ratio is market cap divided by the earnings. So that's PE ratio of less than 2. So it's not unthinkable that this PE ratio will go back to 4. So that's a double. Very good company. Let's take a look at the balance sheet. They have 180 million current assets, and debt is in total 70 million. Total current debt is 60 million. So they have enough cash, current assets to pay off the current liabilities. And yeah, here you can see it. Equity is 160 million in thousands, so 160 million equity. And it's up from last year from 120 million. So this is a profitable company. You can see that the margins were not good in 2019, but they have now risen above the zero line. So margins have increased, and you can see that the equity is starting to rise. And as long as lumber stays this high, around the $1,000 level, then I expect that this business will do very well going forward. And I expect it to go higher. Let's see what this will do tomorrow. They just gave their earnings, and I expect a spike up. And I'll see you in the next video. Bye.